Investment fundamentals pitching to investors. I want to welcome everybody to number 24 O'Connell Street, a lovely new co-working space here in Waterford City, and we want to thank Roisin for her hospitality and having us here. Want to welcome everybody online. Thanks for joining us this morning. We're looking forward to a couple of hours talking solely how to engage with investors, pitching to investors, engaging with investors, how to build your pitch deck, how to engage properly to ensure that you get that next meeting. And that's what we're talking about. So we've just kicked off now, it's 10 o'clock. I'm going to introduce you shortly to Aidan Shine, CEO of Propelor BIC. And then we're going to welcome Andrew Keogh, who's a pitch coach, who's going to talk all about pitching. And then myself and one of our favourite clients, I have to say one of our favourite clients, because you can't, if I say favourite client, one of the many favourite clients, are going to have a chat about the funding journey and the investment journey that he's been on, all the way from New Frontiers through pre-seed, through prep for seed, through the big pitch, all the way to private investors and HPSU. So the whole story, big long story, and now GoChallenge are ready to take on the market, which is fantastic. A quick mention about Propelor for those online. I think everybody who's here knows all about us, but for everybody online to explain who we are. Our mission is to support entrepreneurs throughout primarily their funding journey and prepare them for investment, primarily through Enterprise Ireland PSSF through to investor readiness in order to attract VCs, angels or private money, and then on to the Enterprise Ireland HPSU. There's a gang of us. They're not all here today. Everybody is out doing their thing in different places. We've loads of things going on at the moment. I think May is an absolutely crazy month for everybody. But please engage with us online on LinkedIn, and definitely sign up to our newsletter so that you hear about events and masterclasses that we might hold. A couple of our clients here that we've supported over the years were around since 1995, so quite a while, 30 years. And 11.3 million was raised by our clients directly engaging with us last year, which is fantastic, through PSSF, investors and HPSU. We are funded to do this. We're not for profit, and we're funded to do this work specifically by Enterprise Ireland. So I'm not going to go on and on about what we do, but we can share all that with you. You'll find all that detail on our website anyway. And I'm going to introduce you to Aidan Shine, who's going to explain really the process of getting ready for the investment story, and that piece of the journey that you guys are some of you are already on, and some of you are going to be embarking on in the next little while. Aidan.
So good morning, everybody that's here, and online. Hi to everybody as well. So as Rosemary said, today is the latest in our series of masterclasses or events around investment and preparation for investment. So we've done things in the past about term sheets, we've done things about data rooms. So today is all about pitching for investment. And what I'm going to do first, I suppose, Andrew is going to talk about the pitch and the do's and don'ts maybe. And we'll hear from John then on a practical level. So my role today is kind of to, even before you get to pitching, while you're looking to get investment, what kind of mindset and what kind of preparation you need to be doing in order to make a great pitch ultimately. Because the pitch, it's the culmination of a lot of work, sweat, effort, information, data that you collect as you go along, but it's also the starting point of a different journey in terms of your fundraising journey as well. So it's a very important junction that you will come across as a startup. So the premise for us in Propelor is that great startups don't fund themselves. So the type of clients that we deal with and are funded to deal with by Enterprise Ireland are startups that have scaling ambition built into their business plan from the get-go. So these are startups like yourselves that are looking to grow outside Ireland, to scale outside Ireland. They're solving a big problem. And in order to solve a big problem and to grow and scale, you will need outside investment at some stage. So that's the premise by which under which we're operating today, that great startups don't fund themselves. I came across that quote years ago. I normally would have a source for that. I can't remember who said it, but it is a great quote. And again, it's all about that mindset that you need to get into in order to go out there with positivity and clarity around fundraising. So where Propelor lives in all of this, so startups in Ireland there's a great suite of funding options available to them, and you can see them. We'll go to them a little bit in a second, but we live in that pre-seed, seed space with startups. So that first round where you're probably for the first time beginning to get into that investor mindset phase of your startup. So that in a practical level, that's with the Enterprise Ireland's pre-seed start fund, that 100k convertible loan note piece, and then the high potential startup investment, which is EI investing a little bit more money in conjunction with private investors. And that's where we do the private investor readiness piece as well around pitch prep. And that's why we're doing these series of events every year, because it ties in with our daily work. So what's very important is to get the right funding at the right time, the right phase of your startup's development. And that's part of our role. I wouldn't worry too much about the numbers per se, but just for illustrative purposes, let's say pre-seed is normally that 100k and less than that. Then you're into seed, which can be anywhere up to $1 million, $1.5 million kind of thing. And then Series A, $1 million plus, whatever. So you have to, as an entrepreneur, equip yourself with knowledge around the investment landscape. Who's investing what, and where can you get these particular types of funding? So, for example, the 3 Fs are founders, friends, family. You can add fourth, fools as well if you want. They are very much at that early stage, but beyond that, you can't tap into that source, for example. Whereas with the likes of government agencies, EI could be with you along pretty much a lot of that journey, because even people think that Enterprise Ireland funding stops at high potential startup phase. It doesn't. That's the kind of the opening gambit. They can put lots more money into you once you get HBSU status. So they can be with you all the way. EU grants, as you grow and develop and have a bit more heft behind you, they might become an option. Accelerators, again, very early days. You have the likes of NDRC put 100k into startups as part of their accelerator. But beyond that, there isn't really scope for them to invest. Angels, the same. You have to be, understand where they live within this. So they might be able to fund some of your seed round, but once you get bigger into Series A, they probably don't have the pockets deep enough to help you. Venture capital then is where it's a bigger round and more onerous, I suppose. And you have to be at a certain level in terms of annual recurring revenue or monthly recurring revenue for them to be part of your journey. Some of you might be able to fund growth via customers if you're from the get-go driving sales. They can fund part of it as well. And crowdfunding is becoming increasingly popular and prevalent in the marketplace as well in terms of their ability to fund significant amounts of investment. And again, worth looking at. So this slide is telling you that you have to understand where you are along your journey and what are the potential avenues that you can go down in terms of looking for funding.
I mean, I'll ask a question. Can I ask a question? Or?
You can, I suppose, yeah.
The EU funding is very interesting.
Yeah.
We weren't aware of that at all. So,
yeah, it's like the European innovation funds and that kind of stuff.
Yeah.
Now it's onerous enough in terms of the application. You have to be at a certain level in order to be able to do it because there's matched funding elements and all that kind of stuff with it. But it is worth exploring, definitely. Yeah, a lot of companies ignore that avenue or don't explore it, but definitely worth exploring.
I was at a talk recently and a VC was explaining that because of Trump and everything going on in the US, there's a lot more focus within the EU in terms of supporting startups.
Absolutely.
And I think even more funding now. So they're very open to doing it. So the timing seems to be right for that.
Absolutely. And we're always telling our clients in the recent past, it's become more prevalent to look to Europe for funding. That there is opportunities there, like you have the European Business Angels Network, so they're worth tapping into. So what we're saying here is the onus is on you. You can get advice from the likes of Propelor and all the rest of it. The onus is on you to map out what is out there. You have to understand who's actively investing at the moment, what kind of levels of funding, are there particular sectors. Like the list of VCs there, it's not exhaustive. There are just a few I kind of jotted down. But you have to understand what are Delta currently investing in? What size of rounds are they investing in? Where are they in terms of their investment phase? Are they finishing off? Have they used up all their funds and are now fundraising for the next one? So you have to become very aware of the scene, who's active, who's not active. There's no point in talking to somebody that will not invest in your type of startup, for example, or there's no point in talking to somebody whose minimum investment is £1 million when you're not ready for £1 million to be injected into your business. So it's all about educating yourself, and we can help you with that part as well. But you have to be, I suppose, one of the takeaways is you have to be very clinical and you have to be very organized in terms of what you're trying to do around building that database. Like any database that you build, like of potential customers or potential contacts, likewise with potential investors, you have to understand, as I said, who's active and jot them down and then go through them one by one. The angel side is a little bit more organized in that if you deal with the Halo Business Angel Network, for example, so they will get you in front of their investors. And beyond that, then there's outside of HBAN, you have syndicates like the Boole and Cork, you've Everest and Limerick, you've Awaken Angels investing in female-led startups as well. And then you have loads of informal groups and individuals who are investing very quietly every day in startups. Getting to know them is a little bit trickier, and that's all about network building and getting introductions and warm introductions into these type of people. The state is well documented in terms of what they're doing, but Enterprise Ireland, for example, in terms of numbers, are the most active VC in Europe currently. So last year they invested in 160 almost companies, 28 million. So in terms of numbers, EI are really, really active in that pre-seed and seed space. So well worth looking at as well. I hope John will attest to that afterwards. And then, as I said, crowdfunding, look at Spark, Kickstarter, Seeders and Crowdcube, all the rest of it. So in terms of pre-seed funding, to quickly move through these, but this is where the mindset has to shift slightly. So if you're going for PSSF, for example, that 100k convertible loan note, it's the first time when so if you've gone through that Leo process, for example, it's more about, tell us about the idea and how many jobs you can create. This will be the first time you'll be asked investor type questions. So, and this is the first time you're it's becoming that little bit more information is required, more traction is required, more proof of engagement with customers and the market is required. And this is your first dip of your toes into the investment space, as we call it. And then if you go beyond that PSSF, the next would be maybe high potential startup and private investment. This is where you're really then up to your knees in the investor world. This is where it probably gets very real in terms of having information to hand. And we'll talk later that one of the big blockages in terms of deals is not on the investor side, it's always on the startup side, not having the proper information available quickly enough for the investors to move on. So this is where it gets real in terms of, because you're dealing with EI, who are an investor, and you're dealing with private investors. The EI can't invest to HBSU unless there's a private investor involved as well. So this is where, as I said, the pitch deck has to be right. The investor summary, the financial model, everything has to coalesce into a coherent story for EI and for the investors. And that's why we're doing this today and continues to do it on a daily basis, is to get that across to people. Because, for example, the HPSU, it looks like a form that you fill out, but it's not. It's interrogating you across a whole spectrum of what you're doing as a business and what your plans are as well. And part of understanding investors is understanding the process that they're going through. So you can see there kind of left to right. And again, this is not prescriptive by any means, but this is roughly what they're trying to do. So on the left-hand side, investors are constantly trying to build their pipeline. So they're out and about constantly looking for investment opportunities. So some join something like the Halo Business Angel Network because they can get a pipeline in. Some talk to the likes of us, the BICs, about what's on the horizon, what's coming, any good ideas coming that they might be investing in. Some are very quiet and they're so well known that they don't have to publicize the fact that they're investors. So they're constantly looking for investment. And then they have their own means of screening opportunities. So, and that is a science that's best left to them. They all have their different ways. Some like to invest locally, for example. Some are very sector specific. Some are investing within a threshold of money. They have a minimum and a maximum. They might look at what equity is available and that they won't get out of bed for less than 15% or something like that, that kind of thing. So they have their own ways of screening. Some might give feedback, definitely not coaching. Maybe we're more on the coaching side, but some may give feedback. Others may just say, no, I'm not interested and thanks very much and best of luck and all the rest of it. But if you get back to that, and today then is about that pitching piece, if you get in front of them. Now pitching could mean a formal pitch like they do in HBAN. It could be a cup of coffee. It could be an informal meeting. So that means you always have to be on. So you might not have the crutch of a PowerPoint slide deck with you, but you still have to hit all the relevant points when you're talking to them about the size of the opportunity and the journey that you're on and everything else. So pitching there is a broad one. And then then there's that DD, that due diligence piece. So that's where they do a little bit of a deep dive into you, maybe as an individual, your financial model, your business plan, your route to market, your customer list, and then make a decision about to negotiate with terms, what equity, by what mechanism. Is it a convertible loan note? Is it equity? Is it a safe? And hopefully everything goes well and the investment is made. And then the next phase of the journey starts post-investment in terms of building that relationship with this individual or this fund or this organization and how that pans out. So just to give an indication, I have two slides here. One is from the founder side and the other is from the VC side. So this is a company that we won't mention, raised 1.6 million a number of years ago. And I think before he frightened people, he said, founders, stay positive and stay persistent, right? And that's one of the things we say as well. And it'll come up that you have to be persistent, resilient. You have to be positive as well. So in their 1.6 million raise, they had 287 contacts. So they did what I said earlier. They compiled a list of seed funds, individuals, all of these groups, and put them down and contacted them. So 100 took the pitch or the meeting or the coffee or whatever you want to call it. We don't know exactly what way it went. 50 said no after the pitch, but come back later. Now that's kind of annoying in that come back later, when or what, that's there. Sometimes we see that VCs or investors have FOMO, fear of missing out. They want to string you along a little bit in case some other investor is looking at you as well. So what you want is the next one. You want a blanket no sometimes. If you're going to get a no, you want, do you know something? It's a no, and you can move on, and that's better. So of the remaining 18, 3 invested. So that's 1% success rate. Not to frighten you too much, but also to bring a dose of realism to this, that it is extremely competitive. So John had lots of publicity this week, and congratulations, John, a GoChallenge on raising their pre-seed seed round. But for every successful press release, there's an awful lot of startups who are crying because they can't get investments. It's really, really competitive. But if you do things right, you improve your chances of getting it. From the VC side then, they were talking about, and then this is just kind of rough stuff, when they screen initial deals, 85% progress to the next stage, which we thought is extremely high and very generous, but maybe again there's that FOMO piece. That initial pitch, 30% go on, and you filter right down. So they have investment 3.5% of the total deal flow. So again, you can see how competitive it is, and you have to be realistic that when you're starting your investment round, there's lots of other startups at the very, very same time doing the very, very same thing and going to events like these. So it's highly competitive. And that's why I think if you're focused and very diligent in who you actually target, sometimes you reap higher rewards rather than a broad spread of potential investors. So it's not all bad. Like we would say, private investors, they do provide that early stage capital, so vital for startups. And that's why that PSSF, that 100k with Enterprise Ireland, they increased it from 50k from the old competitive start fund. It's more meaningful. You can do a lot more with 100k. So early stage investment is so important to get you off the blocks and up and running. Angels and private investors, they're a little bit more flexible. They can make decisions relatively quickly. There isn't maybe the structured approach that some seed funds and VCs might do as well. So we would be very positive towards using private investors for early stage investment. And they also bring a lot more maybe than and I'll talk about that in a minute, than just the pure funding. But like anything else, there is cons as well. So they might not have the ability to follow on with investment. It can take a lot of time and effort to find somebody suitable. You are technically giving up a share of your business and maybe some of that decision-making ability that you might want. And you might have somebody that's maybe not interested in helping on a day-to-day basis, or you might have the opposite, somebody who is overpowering and wants complete involvement in your business. And that's a recipe for disaster as well, if the two of you can't kind of meet in the middle. So up to now, I think maybe the tone has been a little bit around that you're kind of beholden to the investor side, but you have to be aware that it is a two-way street, that you are also looking for the right investor and interviewing the investors as well. Are they going to come on board in a way that suits you? Is it smart money, for example? Can they shorten your journey if they've been there, done that before? Do they have a network that you can tap into? Can they give you lots of advice and connections that will help you along? Have they done it before, which is really, really important. What you don't want is a naive novice investor who probably needs education around being an angel investor, and you don't want to be the guinea pig doing that. There has to be an alignment with motivation. So you're outlining your vision. So the investor has to be very on board with what you're trying to do as well. And then we're now getting into the real mindset piece. This is a culmination of years of kind of research that we've done, and it can change. But and you could talk to 10 different investors, and they might all have something different. But this is kind of where it's kind of at. I think number one is the team. Can this team execute the plan that's presented to the investor? And is there that level of trust for the team that they can actually deliver? The revenue potential, how big can this get internationally? How scalable is it? And then what's the exit? How can they get not their money back, but multiples of their money back? And how can they do that? So here we're just, again, as you're embarking on your investor readiness journey, and this is from Barry Brennan in Elkstone, and these are some of the challenges they have seen over the years when talking to startups, and maybe how you can, if you feel you're in any one of these positions, how you can overcome it. So you're looking at the data and the market is looking kind of small. They can say, oh God, what do we do about that? So find a bigger market, or find potential other markets that your solution can be useful in. Explain maybe that this is just step one of your journey, and that down the road there's other applications and other products that are coming that will enhance the offering as you grow. Or something like Airbnb to demonstrate that this is a new market and that existing data is not available to show how attractive this is. But again, that's all about that trust piece, that they believe you, that what you're saying is true and you have the data to back it up in some shape or form. B2C businesses, tricky for investors that kind of do, they get worried about this in terms of the cost of it, how to get customers. Now, there are some investors that like B2C businesses. So again, you have to target those people and get talking to them. A lot of advisors would say, can you turn it into a B to B to C business where you're selling to businesses and then they sell on to consumers? That is often on accelerators or new frontiers. There I say that you do get that message. Can you not turn it into a B to B to C? But it is more attractive to investors. And then crowdfunding platforms are a great way if you have a B2C model, because then you're not only getting customers maybe, and you're getting advocates for your offering as well. Number 3, the double-sided marketplace of supply, demand on either side of your model. Find there is investors that like these type of models. Again, you have to target them. You prove your business case is in a particular niche, then raise funding against the metrics. So it's all about, can you prove that this works in a small way, and say, if I get investment, I can extrapolate it out and grow the business. Or if you can get the supply side or the demand side and say, look, they're locked in, and now the investment is going to get the other side of the business as well, and prove that you can do that. Or just go purely business to business again. So the message here with the consumer side, it can be a little scary for investors. Hardware. Sometimes if it's just a hardware play, again, there are hardware investors. If you look at medical devices in Ireland, very active in the West. There are investors there that invest in medical devices. So it's not all bad news. Or if you can build in some sort of recurring revenue into the model, like Nespresso did with their capsules, or build in something around SaaS, an offering around data or something that you can have recurring revenue. You can partner with a hardware supplier, so they look after developing the hardware, and you're concentrating then on sales and driving the growth. And again, crowdfunding is very important here. The wrong team with the right idea. And now, I'm not saying the wrong team per se. Sometimes it's a solo founder can find it really hard to get investment, because what you're saying is, with investment, you're talking about execution of an idea, and can one person execute that idea? So sometimes we tell people, you need a co-founder, you need somebody to share the load and drive the business on. If you're technical, 100% technical, you need a hustler, you need a salesperson, you need somebody out there who's going to drive the sales. Same with spin-outs from academic institutions. Big questions there. If you're an academic founder, are you willing to give up the academic career to go out and run this startup as a CEO or whatever? That's a very big question. And also then the lack of commercial experience. And that's why we see with some spin-outs that if you can partner up with a commercial lead or somebody who has strong experience in sales, then that's a real bonus. Because every startup, no matter what they do, becomes a sales organization. Ultimately it is about sales, and that's where everything ends up being. You have a terrible idea, or an idea that's less loved, let's say, right? But this is where you need, before you ever go looking for investment, you have to make sure that everything stacks up. So you might have an initial idea, and then it kind of coalesces into something else based on the data and the information. And we had Scurry down in Wexford, I know everybody aware of that company. They came in with an idea originally about backfilling trucks, loads that were coming back and forth to Ireland. And that's now morphed into something creating labels for big companies in delivery labels for companies in the UK. But they took an initial idea and pivoted. So nothing wrong with having the bones of an idea, but if the data isn't stacking up for you, then you need to pivot. It's vital that you get proper advice, mentorship, consultancy. And Ireland is awash, probably too awash, with the potential supports that are available, because part of what you're trying to do is decipher who does what and when and all the rest of it. And then surround yourself with good friends that will be honest with you, not that are constantly patting you on the back. What you need is a friend who will say, that's a crap idea, or you're going in the wrong direction here. So it's always good to get positive stuff, but as we say, we give to our clients, we give that tough love bit. You know, we're being honest, but it's coming from a good place, even if we're telling you have a terrible idea. If you haven't, so the further you go along the journey, zero traction or customer validation, this gets really, really important, even at PSSF level, that first engagement. So you have to demonstrate some traction, some engagement with the marketplace, with customers. Build an MVP, minimal viable product, give it away for free if you have to, get it used, get it broken, get it out there and get it used by the potential customers. And finally on this, cap tables. The temptation for a lot of startups as you're going along your journey, you're giving away bits of equity for stuff that people do because you don't have anything else to give them. And it can end up very, very messy. And this is where it kind of gets technical. Piece of advice here, get a good solicitor. Make sure everything is tied down. Even with co-founders that are mates, everything has to be locked down legally. You might not be mates forever and suddenly you're losing a chunk of your company. So the advice here is get a good solicitor, not your family solicitor, unless they happen to be an amazingly commercially able solicitor as well. Get somebody who understands this process. So my final slide is around that particular mindset. So you're just about, Andrew's coming up next talking about the pitch. So you're just about getting into that phase of your journey where you're pitching. What do you need to be doing in terms of your mindset? So the first thing is you need confidence with clarity. So you need to show your passion. Investors invest in people as much as ideas. So you have to come across as very, very passionate about what you're trying to achieve, but you're underpinning that with data, with facts, with research, with a good business plan, with a good financial model underpinning it all. You need to be resilient and adaptable. So raising funding is a marathon. It's not a sprint. You're going to get an awful lot of no's along the way, but the good entrepreneurs, the good startups learn from the no's and adapt. So if you're constantly hearing the same question being asked, you must ask yourself, how do I stop that question being asked in my next presentation? So be adaptable. You need to understand the investor mindset. Get inside what makes them tick. And I'm not telling you here to say what they want to hear, because that's the wrong thing to tell you to say, but highlight particular areas in your presentation that they need to hear. How big is this opportunity? How big is the problem? What's the route to market? What's the scale potential of this business? You need a relationship-oriented support. Ireland is small. Do not burn bridges. So do not badmouth an investor who said no to you, because you could walk into a room the following week and that person is there and he's heard what you've been. So if somebody has said no but come back to me, it's good practice then to, with their permission, email them every couple of months with progress that you have made and keep that relationship going. You need strategic persistence. So you need to, as I said, keep the relationships going, don't burn bridges, and keep that relationship going with as many people as possible. Be prepared for DD, for due diligence. As I said, deals fall down, the majority of cases, on the startup side. Have your financial model ready to go, your business plan, your pitch deck. If you have IP, have your patent certs, all of that sorted. Have your cap table, everything ready to rock and roll. That if you have a successful meeting or a pitch and somebody says, can I see your financials? And you say, yeah, I'll have them ready for you in 3 weeks. Like, you're dead in the water. And that happens a lot. And long-term thinking. So it's when you get that first round, sorry, John, when you get that first round, it's not the time to sit back and say, way, well done us, brilliant, we've done it. It's probably just the first round. So you have to long-term thinking, where is this round going to get me? What am I going to achieve with this round? And when am I likely to be going back out there looking for investment? So I'll leave it to Steve Jobs. He says, I'm convinced that about half of what separates the successful entrepreneurs from the non-successful ones is pure perseverance. And that's what it's about. So it's about keep going, be positive, and be resilient. So thank you very much. Yeah. I'm not taking questions now, am I? Just straight on to Andrew. Andrew, so now I'd like to introduce Andrew. And Andrew is going to take you through the pitching your startup. So Andrew, would you like to come up?
Thank you very much. Thank you very much, Aidan. It's interesting because I've been doing this for 20 years and I've never heard someone explain it so well, so clearly. And I'm saying, yeah, I agree with that, and I agree with that, and I agree with that, and I agree with that. And that's really interesting. And one of the observations I would have is I often say to people, I've been an entrepreneur since 1988. No one has paid me since 1988 other than me. And then what happens is someone puts their hands up and said, I wasn't born in 1988, which makes it very embarrassing. But the thing, basically, I've been in sales all my life. And the one thing I found about Irish people is they never say no. They say maybe, and they say come back to us, and we sort of half like this. You go to Northern Ireland, they'll tell you no. You go to Germany, they'll say no. And it would be far nicer if they said no, rather than you wasting your time and they being polite to you. So you just need to be careful of that. But what I'm wanting to talk to you about now is the situation, and I've made some points and some notes of Aidan made, and I'll sort of cover them as we go along. But if you're doing all of the work that Aidan and Propelor are asking you to do, and then you get in front of someone, you could only make a good first impression. So you have to get it right first time. You can't come back and sort of say, I want to do it again. So what I'm going to do, in my point of view, is to say, this is how you get your pitch right. This is how you tell the story of your pitch and be clear, it's a story. The most boring pitches are the ones that are a list of facts. You need the facts by all means, but you need to make them a story. The thing I say to people all the time is that the first person you meet, an investor, potential investor, that isn't likely the person who's going to sign the check. So whoever you speak to first has to get your idea, has to understand your idea, and has to be capable of telling your idea to the person back in the office who does sign the check. Because what they have to do is say, we heard this fantastic idea today, and you need to meet these people, and let me tell you what it is that they do. And that's what you're looking to do. And I was talking to Rosemary about this the other day. I've been coaching people to pitch now for 20 years. It came up on my LinkedIn the other day that I'm 20 years in business. I said, I didn't realize that. But almost 20 years ago, I was speaking at an event in Trinity. And he was a researcher, presented this idea. And all the people that were listed on Aidan's panel were judges on the panel, and so was I. And he made this pitch, and I sort of sat there, and I was listening, and I had no idea what he was talking about. None whatsoever. It just straight over my head. And that didn't worry me, because what he was talking about I wasn't technically familiar with. So at the coffee break, I said to the other judges, I said, did you get that? Did you understand it? Because I didn't. And they all went, no, we have no idea what he was talking about. So during the coffee break, I sidled over to this person and I said, look, just as a piece of advice, I didn't understand, but I don't understand what you're talking about. But I said, the other judges didn't understand what you were talking about. And he said, that's their problem. Now, it's not. It's his. He hawked that idea around for 2 years, never changed, never did anything different, and then just sort of petered out. So what I want to talk about really, in a sense, is that how do you pitch? How do you tell your story? But most importantly, how do you create a good first impression? That's what I'm here to talk to you about. So let's get our sleeves rolled up, and I'll sort of dig down into it. And I'll give you the template and how to tell the story of the template. And I'll also give you 2 or 3 examples of clients I've worked with and how they've told the story and how they've got investment and how they've won the investment. So that's what I'll do. I tend to rabbit on, so I'll time myself. Okay, so let's get started. So what's the first thing you need to do in terms of preparation? The first thing you need to do is whoever you're talking to, whoever is your audience, you need to walk in their shoes. You need to think about what is it that they want? What is it they're looking for? What is it that's going to be of interest to them? Speakers are always talking about what they want, and they're always thinking about what they want. But that's not good enough. If you're going to communicate with an audience, you have to be thinking, what is it they want? What is it that's something that we have that's really of benefit to them? So that's the key message. And every time I put this slide up and people say, why are the shoes there? And the shoes are there because Billy Connolly tells the story that says, if you want to understand someone, you've got to walk a mile in their shoes. And if at the end of the mile, you don't understand them, well, you're a mile away and you have those shoes. But the key, that's the reason the shoes are there. It's really to walk in the other person's shoes. Well, what do you need to do? The first thing that needs to be crystal clear in terms of preparation is people are going to want to know who your customers are. So, and I often explain this to people, if it's Google, it's an individual in Google. What does the individual in Google want? What does the individual in Hewlett-Packard want? You can't pitch to a huge conglomerate. You're always pitching to an individual. So you need to talk about who's the customer. And the example I would give you with that is the number of times, and I now coach thousands of people, and I meet them a couple of years later and I say, how's the business going? And they'll say, oh, it's going grand, but we pivoted it. I'm saying, oh, how did you pivot? And I know the answer. I said, how did you pivot? And they said, the customer we thought we hadn't the slightest interest in what we were doing, and we had to find another customer. So the most important thing from your point of view is to be absolutely crystal clear, to talk to customers, find out what customers want, find out what's the problem that customers have, and how does your solution solve their problem. That's the key to this. And I'll show you how to, in a sense, the example of the clients I have, how you turn that into a story that's sort of memorable and engaging. So the three questions you need to answer in terms of preparation is, who's my customer? Because that's who an investor needs to know. Who's your customer? What's the problem you solve for that customer? And finally, and this in some ways is presentation skills, but it's also critical, how is that customer better after they've introduced your solution to their problem? What are they saying to you as a result of implementing what you advise us to do? This is now happening, and this is how we've improved production, or we've reduced emissions, or whatever that is that you've done. But you need to be able to talk about that. People only buy things that make them better. And the other point I would make to you is, and as we go along, I'll explain this to you. And Aidan was talking about it. You start with an elevator pitch, which is probably 2 minutes over a cup of coffee with someone, but you need to hit the key points. You need to hit those 3 questions in that 2 minutes. And then they will say something like, which you would hope to say, well, that sounds really interesting, tell me more. Now you have permission to talk for another 10 minutes. And then you say something else, and then they say, oh, and how will you go about doing that? And then you have another 10 minutes, and then before you know where you are, you now have a conversation that lasts 15, 20, 30 minutes, and you can do something valuable. But it starts with that sort of elevator pitch. The elevator turns into a sales pitch, and the sales pitch turns into an investor pitch. But lots of the stuff, when I talk to investors, what people often say to me is the startup is trying to be an investor and think like an investor. You don't need to do that. You need to think like a salesperson. You need to think about, this is the amazing product we built. This is what we're really excited about. And we will need help with the financials advice, and we will need help with that. And that's what we're looking for, to build a team. But first and foremost, they have to see, wow, if these people can do this, this is amazing. So let me tell you how we go about doing this. And this is the way I explain it. And it seems to work. I've been doing it now for quite a while. What I want you to do is imagine planets orbiting in space. And the planets are orbiting around the sun, in this particular case, which is called the problem story. So I believe every pitch should start by you saying, let me tell you how we fix this problem for this particular group of companies. That's, with rare exception, and there is sometimes, and I'll explain that to you. Here's a young man here who, it was a rare exception. I saw him pitch a couple of months ago now, isn't it? A couple of months ago. And about 4 or 5 slides into his conversation, he'd already told us that he had 500,000 in business. Is that right? Okay. So if that case, I'd be saying, let me tell you how we got to 500,000 in business, and let me tell you the problem we solve. Now I'm paying interest because it means there's business being generated. But in most cases, startups aren't that lucky to already have 500,000 in business. So start with the problem story. Tell me the problem story, tell me. And in telling me the problem story, you're likely to tell me who the customer is, and you're likely to mention names. And now I'm saying, oh, so if you can do it for them, you can do it for them, and you can do it for them, and you can do it for them. And I'll give you an example later on, where one of the teams I'm working for is supplying to hospitals. And they were able to tell me that there's 96 hospitals in Ireland, and they were already in 5 of them, and there's 1,700 hospitals in the UK, and they've already in 1 or 2 of those. Now you know there's a business, it's a serious business. So tell me the problem story, and it should be a story. Then the next thing that's absolutely critical from my point of view is, I pointed at this. Who are you going to invoice? That's the thing I want to know, almost immediately. Who loves this, and who will we send an invoice to? And I always tend to say, send an invoice, because that makes it very serious. You haven't got a business unless you're sending an invoice to someone. Now, you may do it in different ways. You may charge them an annual subscription or a monthly subscription, or so, but you're still sending an invoice. And I need to know, as soon as you tell me the problem story, I need to know next who you're going to send an invoice to. That's the piece of information I know. And the other thing I want to do is, sorry, let me go back a bit. I want to know who's the team, who's involved. And these are the 2 critical things. If you're not invoicing someone, you haven't sent out invoices, you can tell me about who you plan to send invoices to. But interestingly, you've got to decide in terms of your conversation and the order you tell the story in, which is the most appropriate to talk about now. This is the problem story. This is the team who have the experience and the knowledge and the background and the qualifications to do this. So perhaps you go problem story team. And then you say, this is who we're going to invoice in the future. This is how we're going to do this. If you have, like this young man here, problem story, let me tell you who we've already invoiced $500,000 for. Now I'm really interested. And who's done this? So this is the team. So they're the 3 critical planets in this story. That's what you have to talk about, and that's what you have to talk about sooner. The big mistake that everybody makes, back to here, the big mistake that everybody makes is they want to start talking about what they do, their app, their platform, their piece of kit that they've built. I have no interest. No interest in that until you tell me it solves a problem for me, or someone I care about, or someone who I love, or someone who will clearly pay money for this, and invoice. So the third conversation, part of the conversation is, so now we're saying, this is the problem story, this is the people we've already invoiced, or we plan to invoice, this is the team who've built this, and now the natural inclination is, okay, so what have you built? Now I want to know what you've built. But the danger is with everyone is you sit down in front of someone and they say, what do you do? And then you drone on about your app, and you drone on about your technology, and you drone on about it. But they haven't seen the answers to all the important questions that they need to see. And in lots of cases, the do isn't done. It's a wireframe, it's an idea, it's the first prototype, but it's not done. The product isn't built. So don't get bogged down in the product, because then they'll start talking to you about the product and how you're going to do this and how you're going to do that. And then you don't know the answers in lots of cases. So don't talk about that. The least time spent on the do is the better. Just, this is what it does. This is great. And I'll give you examples of that now in a moment. And then, so that's your solution. And then, go back to here again. What I want to know is in terms of, where are you on this journey? Are you at this for the last 5 years? Are you at this for a year? What's happened in that year? I've built out the team. I've hired 2 more people. Enterprise Ireland have given me some money. Friends and family have given me some money. So I want to know that, because what you're looking for as an investor meeting you for the first time, what you're looking for is proof that other people believe in you, proof that other people see value in you, proof that your family see value in you, your work colleagues see value in you. And that's what you're looking for in terms of milestones. So that usually is a slide, it's just a line. And it says we started in this, we did this, we did this, we did this, we did this. And what happens is over the years, things get dropped off that because they're not nearly as important. You know, in 2 years' time, you're saying we got 250,000 from an investor. So you don't be talking about the 20,000 your father gave you or whatever that is. It's not relevant anymore. But so that's a slide that's milestones. The other thing I want to know then is who's your competition? And this fascinating, it only took me years to realize this. In lots of cases, your competition could be Excel. But it's an aspect of something in Excel that Excel does. And you've taken an aspect of that and you've made it really easy to do. So it is Excel. And there's a company I worked with years ago, and what they did was, the guy, which fascinated me, he said that 70% of banks, and this is 4 or 5 years ago, and it probably hasn't changed that much, were still doing their bank reconciliations on Excel spreadsheets. And I said, that can't be the case. That's ridiculous. And he says, it is. That's what they're doing. So he says, what we've done is we've taken an aspect of what Excel do, and it's now a platform that says, if you're a bank and you want to do your bank reconciliations, this is how you do it. This is the platform you use. And now they've been hugely successful. But the competition is Excel. And sometimes if you take Scurry, sometimes, you know, what they realized was it was every other transport company in Ireland was doing sort of the same thing and looking for backloads and things like that. So that didn't work, and they found a different way of doing it. Then the other thing that they'll want to know, and this is, they only want to know this if they've loved the first things you've told them. You're never going to get to these questions if they sort of weren't interested in what you talked about. So you're ticking off the boxes, and they like this, and they like this, and they like this, and they like this. And then the next question is, okay, so what are your sales projections for the next, if you're an early stage startup, I'd be right in saying it's probably 3 years. What do you think you're going to do in the next 3 years? If you're a bit further down the road, it's what you're going to do in the next 5 years. And so we want to know, and the thing that's interesting about that is, that question is much more about what's your level of ambition. It's not what the actual sales is. It's, do you have a big vision for this? Because we're only, if you don't have a big vision for it, you know, we're not the people to be talking to, and you don't need investment. You can just build a very nice business that has $1 million or $2 million turnover. It'll be a very nice business. But what we're looking to invest in is businesses that have 10 million and 20 million and 50 million. So there's a sales forecast that you talk about. And if they're still interested, then the next thing you talk about is, what are you asking for? What do you need to get that done? What do you need to hire the person, to add an additional person to the team, to buy the kit that you need to build whatever it is that you want to build? So what are you looking for? And what I've found over the years is, I think particularly in America, in Ireland, it doesn't apply in America, we always ask for too little. We're always playing ourselves down. You tell a story that says, you know, we're going to be supplying Google and Hewlett Packard and all the rest of it, and then when it gets to the ask, you say, I'm looking for 20 grand, you know. And that just immediately says you haven't got the ambition. In America, I think everyone starts at like 3 million. That's where they start. You know, this is the idea, and we're looking for 3 million. But we're not America. But so the point really is then that clearly you need an ask. And then if I was to ask you for €100, what would you say to me?
What's it for?
What's it for? So that's the answer to the ask. This is what I'm looking for. And this is what I want it for. So it's not just throwing out an amount of money. I want to know how you're going to spend my money. And that's often just as simple as a pie chart. It's a pie chart that says, we're going to spend 25,000 on recruitment. Well, no. I had this recently. I'm doing some work for an ag tech program out of UCD, and it's a huge program. And one of the guys said, we're going to spend 50,000 on hiring an ag tech expert. And I was saying to him, I don't think you're going to get an ag tech expert for 50,000. You know, so your first thing you're going to have to say is that's 150,000 just for that person alone. So you need to be realistic about it. But what you're doing is, if you're asking for an amount of money, you're going to tell the person how you're going to spend that amount of money. And then they can either agree with you or they can disagree with you. And if they disagree with you, they're not going to give you the money. But if they say, that seems like a sensible way to spend my money, and then they partner with you and they give you the money, and away you go. What's next? What's next on the slide? Oh, yeah. So let me tell you, why are the planets different sizes? And this is a presentation piece of advice, but also it's an important piece of advice. If someone gives you, for simplicity, let's say, someone gives you half an hour to pitch. Come to meet us, we have half an hour. Where do you spend your time? Spend your time here. I would suggest you spend 5 minutes here. If they don't see the problem and the opportunity, you're not going any further anyhow. So you spend most of your time here to get that story across to them. Then you go here. And then you sort of elaborate on who the customer will be and who the potential customers are, and the number of people you're already talking to and the meetings you've already have, and the people who've decided to run a pilot project with you, and all of that sort of thing. And that's where you spend that time. And then you spend time here. So let's say it's half an hour. I would say 10 minutes here, 5 minutes here, 5 minutes here. Now 20 minutes is gone. But it's a very valuable 20 minutes because you've answered all the key questions that they need to know. These things here are, I would say, and probably Aidan might disagree slightly with, these questions here are more 2-3 minute comments. And the reason I suggest the 2 to 3 minute comments is they're the areas where you're weakest. They're the areas that you don't know about. They're the areas where you need investments and investors and people like Propelor to advise you and support you and encourage you. But if you're not madly enthused about here, here, and here, you're not going to get to here. Simple reality. So these things, and probably, and I know this from my own experience as well, this is the most scary bit. You know, what do I say? Do I say 1 million? Do I say 2 million? Do I say 5 million? Do I say 50,000? I don't know. But whatever you say, you have to be confident saying it. And this young man at the back has sort of said that they're making, am I oversimplifying it by saying you make jams?
It's correct. Yeah.
It's correct, okay. But he makes jams, but Tesco are going to stock them nationwide, his jams, all over Ireland. Now, we make jams. Our jams are sort of, there's no sugar, it's organic, so this is really important, and people are looking for that. And let me tell you who we're already invoicing. We're already invoicing Tesco, and they're stocking it in every stop in Ireland. Do I want to know more? Because now my natural, if I'm an investor, I'm saying, well, if they're doing it in Ireland and it's a success, they'll do it in the UK and they'll do it wherever else. And who's doing this with you? And I want to know that, because are you planning to make the jams yourself? Are you going to contract out the jams if someone's going to make them for you? I need to know all those sort of things, but they're the key messages. This is interesting, and the reason it's a different color is that, if I can ask you on the jams, if the jams go well, what will you do next?
Get into more stores.
Get into?
More stores. Other customers.
Okay, no. You're selling everywhere. Every supermarket we go into now has your jams. It's really successful. What are you going to do next?
I transfer the same solution that I provide into a different category.
Okay. Give me an example of that.
So it's all about reducing nasties like sugar, but increasing the taste experience and making it more tasty. And I'm going to apply the same principle into, for example, fruit gums as well.
Okay. So now, what we've done here is we very clearly, simple story, we're going to make jams. We're already into Tesco, and I already have the team and we're building it. Let me tell you about the next big opportunity. It's sweets. Sweets that don't have sugar in them, sweets that are good for your kids. So that's where we're going next. But the danger, lots of people, is they get these two stories confused. They want to tell me both, and I don't understand either of them. I'm sort of lost a bit. And so I'm always saying you will have, and I don't mean to be offensive in this, but making jams is a nice business, but what else are you going to do? And that's what that message is. So once we have this up and running and we're in super value and we're in the next thing we have to offer them, or the next thing we're planning to offer them to build up our business with those existing clients, is sweets that don't have sugar in them, gums that don't have sugar in them. So that's the message you're looking for there. And that's the story you tell. And then finally, and this is more a presentation skill than anything else, this is, I want everyone as a communicator to finish by saying, this is how our customers are better as a result of buying our product. And the only reason someone will buy something is because they believe it's better. Your children can enjoy jams, but they'll be healthier. Your children can enjoy jams, but they'll have teeth when they're 40 years of age. You can put it that whatever way you want to describe that, but that's where you want to finish. That's how this finished. So simply what I'll do, and I'll send it on to Rosemary, I can give you templates for that conversation. But the point I want to make, and the reason I explain it in this way, is that the first beginning, I'm suggesting you go, this is the problem, this is the team who has the expertise in the problem, and these are the people we plan to invoice. That's really important. And then the other things get answered, and this is what we're going to do, that's get answered. A year down the road, it may very well be, this is the problem hasn't changed, but let me tell you who we're already invoicing. And let me tell you how much sales we have. And in our first year, we have a $250,000 in sales. No, 400,000, wasn't it, in sales? We have 400,000 in sales. Now I'm sitting up and I'm paying attention because this is not a pipe dream. This has now become a reality. And I'm now going to tell you how we make the 400,000 400 million or 40 million or whatever that is. So the reason I explain it this way is when I send you a template, and when you look at all the people who send you templates, they send you templates. And because it's on a page, you want to follow the formula on the page or the format on the page. So often I see it that because of the way it's laid out in the template, you don't talk about the team until the final slide or the second last slide. I want to know from the beginning who you are. I want to know why you're excited about this. I want to know what your business experience and acumen is. So these are continually rotating and moving and changing and become more important and less important. But it's to realize that you tell the story and you keep giving the good stuff first. And the good stuff will change as the business evolves. And that's what you do. So it's not sort of something that we turn up and we do this and we sort of tell it the same way every time. That's not what I'm looking for. I'm looking for you to turn up and realize that, but I don't want to follow a template that someone's given me, and I'm talking about, it's interesting, just to sort of I'm not getting sidetracked really. I was contacted by a guy in Canada a couple of years ago who had this amazing idea to do with telecoms. And he came over to Ireland to meet me, and I had a 3-hour meeting with him. And this is between you and I. At the end of the 3-hour, yeah, and I'm not mentioning his name, but at the end of the 3-hour meeting, I said, I can't deal with this man. This man will break my heart. He went all over the place. There was no focus whatsoever. He went all over the place. But one of the really interesting observations was, he said, look, when I come to Ireland to pitch, or when I come to Europe to pitch, they want this structure. They want to know, they want you to answer the questions and show how it becomes a business and all of that sort of stuff, and they want to know that. He said, I fly down to Silicon Valley and all they're interested in is the vision. Just tell me the vision. Tell me how big, how many billions this is going to be. And then we'll decide whether we're interested in this or not. And then you'll obviously have to come back at some stage and answer all these questions. So there's a part element of that. And that's the problem story. This is the big problem we solve for people. And that's what you're looking to do. So I think it needs to be, again, and Aidan made this point, who are you talking to? What's who will they invest in? Who will they support? What values, how much money, what's the cost? So you make all that judgment if we go back to who's the audience. But that's how I suggest you do it. And I'll come back to that. We'll come back to that now in a moment. But let me move on and give you a couple of examples. This is a company called Scipio, started by Dan Cohn. You've probably, if you look at LinkedIn, Dan is all over LinkedIn in the last sort of 6 months or so. And what I like about this is it does two things. If you're putting up a slide, it should be capable of being read within 10 seconds. There should be very little words on it. There should be visuals where possible. And this is an example of that, because what Scipio does is if you go to a concert or a football match or an event, what Scipio do is to get you to skip from the back of the queue to the middle of the queue to the top of the queue and get served quicker. That's what they do. And they do that in one slide. I don't need any other slide to explain to you what Scipio do. That's what they do. But Dan started to tell me the story about 2 years ago, and I said, no, hold on. I know this story. This is my story. And I want you to imagine, it can be Croke Park, it could be wherever you were, but my story was when he started to explain to me what we do, I said, I know this story. And I was in the Aviva with my son and two of his mates, and Ireland were playing Scotland. It's probably 2 or 3 years ago, and Ireland were playing Scotland. And one of the lads just before half-time said, I'll go down and get the pints in. And he disappeared off to get the pints in. And we waited till half-time, and then we went down to find him. But when we went down to the catering area in the Aviva, there was thousands of people there, all queuing up. We couldn't find him. He couldn't find us. We were ringing on the phone. He wasn't hearing his phone. So we had to buy more pints. And because we were delayed buying the more pints, by the time we come up, the match was on about 5 minutes. And Michael, what's his name? Can I tell you? I remember this morning and now I don't know. Obafemi, Michael Obafemi, scored the best goal Ireland as a soccer team had ever scored. He scored it 2 minutes directly after half-time. We were still in the bar. We missed the best goal that Ireland as a soccer team had ever scored. So we came back up, and then about 10 minutes later, the guy who went down to buy the 4 pints, he arrived up, and he's livid, because he's bought 4 pints. He's had to drink 2 of them, and he's had to leave 2 behind, just a mortal sin. Oh, you had to leave 2 behind. Now, can you think of a similar scenario that you've been in or something similar? It's happened to you in some situation, whether it be a rock concert or whether it be that. And that's what a problem story does. A problem story needs to engage you. It has to be, I can't wait to tell my dad about that. I can't go home, oh, wait till I tell my wife about this. This is amazing. So it's not just a story, it's a story that engages people. And as soon as they bought into it, then they see. And then what Scipio, what Dan explains is, so how we solve that problem is you download our app, you sit in the crowd, before halftime, you order your drink and your food on the app, you pay for it on the app, they send you a QR code, you go down to the priority queue, and you get paid, you get served in 30 seconds as opposed to the average of 2.5 to 3 minutes. That's what you do. That's really cool. Now, the thing that's interesting is who's the customer? Catering company. It's not us. We'll use it because it's amazing, but we're not going to, we're not going to pay for the app. We're not going to do that B2C thing. We're not going to do that. We might. Some of us might do it, but we're not. But if we have it for free and it solves a problem for us, but the thing that's interesting is the customer is the catering company, because now they're serving people in 30 seconds as opposed to an average 2.5 to 3 minutes. They know what people want in advance. They can prepare it in advance. They can do their stock control. They can do all sorts of management of things to make their business more efficient. So the story is about you and we buy into it, but the customer is the catering company. And now, it's probably 2 years since I worked with Dan. He's now in the Aviva. He's now in Leopardstown. He's now in loads of pop concerts that are going on. And that's the point I'm making, is join this queue, get served quicker. Skip from the back to the front. Don't stand for anything less. That's his story. And it's already, now he's a clever guy, a smart businessman, good commercial sense, but that's how he tells that story. The other one I want to talk to you about is, this is a company called X-Wave. And X-Wave was started by Professor Ronan Killian out of Vincent's Hospital, and he's a radiologist expert. And what they say is, we save lives by ensuring the patient gets the best test first. That's what they do. And I didn't know until I started working with them. I just presumed the scan was a scan. I didn't realize there's loads of different scans. And what most people do is they don't get the right scan first time. So the story they tell is, this is Mary. She's 52 years of age. She's had breast cancer previously, and she's now having headaches. She goes to a doctor and she says, I've had headaches for about 3 weeks. And the doctor says, I'll give you some painkillers. And the doctor gives her some painkillers. And she comes back 3 or 4 weeks later and she says, still have the headaches. And the doctor says, I'll leave it for another week or two and see what happens. So she comes back and she still has the headaches. So the doctor says, I'll send you to a consultant. And the consultant sends her for a scan. Now in Ireland, someone was telling me this recently, in America this all happens in 24 hours. In Ireland, the doctor writes to the consultant writes back to you, the consultant agrees a date with you, so now you're already into 5 or 6 weeks or 7 weeks before anything has happened. So you go for the scan, and you meet the consultant, and the consultant says, I have good news, says everything's okay. But Mary says, I still have the headaches. So four scans later, Mary discovers that she's a tumour in her brain because she's got the right scan. But that's now 6 months later and it's too late. And that's happening all the time. So what X-Wave are saying is, one scan, one visit, one rapid diagnosis. And as a business now, they're going business probably 3 or 4 years. Their software is in every doctor's computer in Ireland. They're in, at the time I was working with them, they were already in 5 or 6 hospitals. And that's where they come and they said, our customers are hospitals. Because rather than spending money on 4 scans, once we get the right scan first time every time. So we save the hospital money, we save lives, we do all of that. And that's what they do. But interestingly, when I met Dr. Ronan Killian for the first time, he was explaining to me how to read a scan. I said, I don't know how to read a scan. And you're not going to train me how to read a scan, but we've got to find the story, and that's the story they tell. And that's the message that gets across to people. So we save lives by ensuring the patient gets the best test first. And interestingly, if we go to the other, which wasn't developed at the time, but now it is, that planet that says other, what they're now doing is they're reading the scans by AI. They don't even need a radiologist. And only when it flags up something does the radiologist become involved. And that's how you tell that story. And I would suggest to you that as I'm telling you that story, you know someone who's been in that situation. You know someone who didn't get the right scan. You know someone who was sort of 6 months hanging on before eventually they got some information. You just do. That's what good storytelling does. You could explain to me about the scans, or you can tell me how Mary outcome could have been dramatically better as a result of their technology, which it now is in actual fact. So we're back to here. This is me boasting. Take a moment to read that. And that's what I help people to do. I help them to sort of get to the situation that they make a good first impression, first time, every time. I'm finished. This is my final slide. I capture your business story and I give you the confidence to tell it or sell it. That's what I do. People like Propel will help you a lot more in the technical details, but I'm the person who says, do you want to make a good first impression? This is how you do it. This is how you tell the story. The other point I'd make to you is I produce an article every fortnight on my website and on LinkedIn, and it's always about pitching or presenting. You're very welcome to sign up. There's already over 150 articles on the website, and they're all generally in the area of presenting and pitching and communicating. They're all there. They're all for free. Thank you very much.
Great. Thanks, Andrew. That's great. Thanks so much. Very interesting. I was stuck to that. You were singing off my hymn sheet, Andrew. That's John.
Rosemary.
Yes. So, thanks everybody. It's warm in here. I hope everyone isn't passing out too much. It's great to have John Barron here as a CEO and co-founder of GoChallenge. And we've been working with John for 3-4 years now, quite a while, and we're really delighted that this week, fortuitously, the timing was great. This week, John announced GoChallenge's seed funding round closing of 500 grand with Enterprise Ireland's involvement. Tell us a bit about why you started GoChallenge. What inspired you?
So my co-founder is my wife, Katrina, and Katrina's a GP in town here in Waterford. And post-COVID, she came home one evening and she said she'd just seen an explosion in people that were burnt out, stressed, anxious, all walks of life, and they were looking for medication to help. And Katrina would write on a prescription pad, go for a 30-minute walk. 30-minute walk. She'd be a huge proponent in the benefits of exercise. And invariably the response was, I'm too busy. I can't fit it in, And she was saying, is there some way? So prior to this, I had another company called Venetics. It was a tech startup. And she said, is there some way we can help people to exercise? So I hit an age where I was no longer playing on teams and stuff like that anymore. So I was one of those people who was struggling to exercise. So I looked into why people struggle to exercise. And it's not time. There was some research done by the university in Melbourne. And what it is that people struggle to exercise for 3 reasons: lack of support, lack of motivation, and lack of external accountability. The external accountability is a big one. So I give you a very quick example. I used to go running with my brother Brian. Brian was great. You could set your clock by him, hail, rain or snow. He'd be there at 8 o'clock, meet me outside Arkeen Stores, and we go for a run. So that was my external accountability. I'd be sitting at home going, that's the last thing I want to do now, but I go for the run. So what we've done in GoChallenge, it's a platform and an app. We've built that into the style of our challenges, and they're very much designed to be inclusive, and we go after the corporate market, and the timing is right. We only launched in 2023, believe it or not. So it was January 23, we had our first client came on board, and so yeah, we're going 2 years. We're learning a lot. As Aidan said, we had a kind of an MVP that we put out first. And could I talk about maybe New Frontiers and how we even got to that point?
Can we roll back a minute?
Yeah.
We'll get to that in a minute. Tell us who are the customers, because it's sometimes to Andrew's point, whose problem are you really solving, and who are the current customers of GoChallenge?
So the problem we're solving at the moment, and especially I think post-COVID with a lot of people working remotely and this hybrid sort of working practice in place, what we're seeing is that, and research will back this up, work-related stress and burnout is at an all-time high. People are also reporting feeling disconnected from their colleagues and their company's culture. This is something that keeps coming up again and again, and companies are trying to address that. And lastly, and probably most alarmingly, we're now more sedentary than any time in our entire history. Here we're all sitting here again this morning, right? So that's really detrimental both for your physical and mental health. So we're trying to address those three issues. And the timing is very right for it, Rosemary. I think that's one of the things with business as well, guys. Timing. When you've got something that, hits the zeitgeist, and that's what we're doing. So in terms of our decision maker, we know our buyer persona. It's HR and wellness directors. They are predominantly women. They're aged between 35 to 60. They're really, really busy. So they're running not only a HR department, but they've also got a family life. So what we've learned is when we go in is that we do everything for them. We run the challenge. We have a success coach that will run the challenge from start to finish. And that's music to their ears. They don't need to do anything. They're busy enough as it is. So as one of the HR, we're working with a pharmaceutical company recently, she said, I loved it. You came in, you wrapped it in a bow, and you made me look good. Yeah. And that's something we've written up on the wall back in the office. That's exactly what we want to do. We want to make the HR team look good. Yeah. That when they get in a lift on a Monday morning, someone goes, I'm loving this GoChallenge thing. It's great. And that's very, very important.
They're getting the credit for it.
They get the credit for it, and they come back and they go, we want to do another one.
Who is the sweet spot customer then? You mentioned HR directors and you mentioned a pharmaceutical company. Who's the beachhead? So
the beachhead it's HR directors, wellness directors in companies that have embraced hybrid working where people are sitting at their desk. Okay. So those kind of smart economy jobs. So we don't really go into factories, or we don't work with people who are working manually or anything like that. Yeah. So it's more the smart economy, solicitors, accountants, IT, it's those type of people, and people working from home and have that sense of loneliness and want to feel that connection back with their colleagues and their company's culture, Rosemary.
Yeah, brilliant. Bring us back then to New Frontiers, back to the beginning.
So New Frontiers was a godsend, and I would say, I think Andrew mentioned, or Aidan mentioned, Ireland is a great place to set up a company. It's only when you meet people from other countries and you talk about the support you get. And what's great about Ireland is, and I've taken every step, right, is that you can do that. Yeah. So at the start, when myself and Katrina said, okay, we're going to give this thing a shot. I'm going to go full time on this. We're going to put some of our own money into it. New Frontiers, I think I met, Eugene at SETU. We're very lucky in the southeast as well. We've got Eugene in Waterford, and we've got Gemma up in Carlow. I did the Carlow variant. What I advise anyone doing New Frontiers, what we used it for was to validate our business idea. But we were a bit cuter than that. We also used it as a way to create sales. Yes. So when I sent out an email, I spoke to 36 HR directors across UK, Ireland, US and Canada. And I'd say to them, look, I have this idea. I'm thinking of putting my own money and own time into this business. I'd really like a half an hour of your advice. Okay. This is not a sales call. Yeah. This is, I want to validate this, that we're not smoking dope, that we're, there's something behind this. So not only what happened then was most people said yes to the call, which was the first thing. And then I think that's been one of the great things about post-COVID is that you can do calls on Teams and all. You don't have to go. I didn't visit anyone. These were all calls that were done virtually. And what happened was that 2 of our first customers, 3 and corporate care, came from those calls. And we also I dealt with a lady in the States. She was, again, EI were brilliant. They gave us some of the names of people to contact. The lady was called Alison Grace. She was the head of HR for the Discovery Group. And subsequently Alison said to me, if you come up with something that can deal with getting people to move more and the connection piece. Yeah. That's where we learned about the connection piece. Initially, we were just going to be this sort of well-being, health kind of thing. Yeah. But our proposition changed because this connection piece is a real pain point universally at the moment.
And isn't that a really good example of where customer discovery changes and pivots the way you present
Informs
the
your proposition.
proposition.
Exactly. But what's more than that, Alison said, look, if you can do this, I'll be interested in investing. So Alison has been was one of our first investors in the company, and she's now on our board of directors.
Yeah.
So like that all came from New Frontiers, you know, and then New Frontiers introduced me to Propel Bic.
Yeah.
Right, and that was huge as well in terms of then we went for, which was called CSF at the time. It's now PSSF.
Yes.
With Enterprise Ireland, and they had a female-led round.
That's right.
So you had to have a founder or a co-founder that was a female. Unfortunately, Katrina's a female.
Good.
So that's all. Yeah. So we pitched to Enterprise Ireland, and my advice to anyone pitching for PSSF: firstly, touch base with yourselves in Propel. You're really just in terms of the type of questions you're going to be asked, the pitch itself. You really did help. We wouldn't have got it without your guys' help, and I mean that. But what it was, sorry, what was the point I was making there? I got distracted.
CSF to PSSF, I suppose.
Oh, yeah, is that
journey.
you've got to have a paid customer.
Yeah.
You cannot, they're not, I think it'll be really, that was the question we were asked right at the end. Do you have any paid customers? And then I said, this is it, this is the, and it's like a sales pitch. You know in a pitch when there's a question and you know this is it, this is key to getting this deal across the line. And that was the same with that. Do you have any paid customers?
Yeah.
And we were very fortunate at the time, both three in corporate care, coming from our talks with New Frontiers, from New Frontiers, were willing to give us a chance and willing to pay money. I did not offer it for free.
Yeah.
Okay, I've learned that from being on the other side of the desk, working in large companies. Whenever you get anything for free, you do not value it. Don't give it to someone for free. Even if it's €2,000, just something that you've sent an invoice. That's so important, and it builds credibility.
It does change the face of a discussion, doesn't it? When you're able to say, actually, we have a paying customer, you see people literally sit up and take notice.
Yes. And it makes people say no. That's the other thing. If you're saying, look, we'll give it to you for free, oh yeah, okay, we'll do it. But their heart isn't in it.
Yeah.
But if you say, look, you got to put, you got to write an invoice, you got to get a budget for this.
Yeah.
That focuses their mind. It's very important.
What did that original CSF then give you the opportunity to do? What was the step that you were able to make from CSF then until you got further funding?
Yeah, I think it was two things. It bought me time, so and it allowed us to get our crap together. So we started we were looking to build credibility in the brand and credibility in our tech. So at that time, it was just me and my own really driving it. I was fortunate, my previous business, as I said, was a tech business. So I had the wherewithal, even though I'm not tech, I'd be more commercial, I'd be the hustler that Aidan mentioned, going out knocking on doors. But I knew in terms of what we wanted our app, we needed a platform, and we needed a front end for the client. And I knew the people that I could get to build that here in Ireland. I have friends of mine that have started businesses, they've outsourced that to India and Eastern Europe, and there's horror stories about that. I was very fortunate, I'd worked with these people before, and I was able to get them on board to do it, So that brought us along the line then, where every time we deployed it, we've had, I think the last 2 years we've gone on holiday as a family, and I've been on the laptop an awful lot during that time.
Yeah.
I would say that every deployment has been really stressful.
Yeah.
Things have gone wrong.
Yeah. Whatever can go wrong will go wrong.
Will go wrong.
Yeah.
And I think most people are actually they're decent. They understand that, look, this has gone wrong, but we're doing our best to fix it.
Yeah.
I'm very lucky in terms of the guys that are in the boat with me in GoChallenge.
Yeah.
They go above and beyond.
Yeah.
Now, they've all got a bit of sweat equity, or all got, there's and I think that's something again, in terms of giving people a little bit of skin in the game, that they're there with you for the long term.
Yes.
I think, but you got to pick those people very carefully.
Yeah, and we've seen situations in the past where people have given equity away for small bits of work that aren't committed into it, and end up with a very messy cap table.
Yes.
But it is really important, as you say, to pick who you're going to bring on that journey with you, and make sure that they're engaged and motivated and want to stay with you. That says a lot about the project. It was an unusual time in that you got CSF, and then the PSSF fund was launched, and you were able to go back in and get another portion of that because the CSF had been smaller. That's done away with now because it's just pure PSSF. But that brought you to the next step then beyond that, when you got the second phase PSSF, and you were then looking to raise bigger money and to increase the team, increase the tech.
Yeah.
What happened then?
I think I've been very clear from the start in terms of our roadmap. All right, so out in the office, we have the roadmap up on the wall, and it's only a 1 year. So that's, again, that this is digestible, this is achievable, this is what you have to do, Ronan, this is what you have to do, Gary, your name is next to these. Okay, so this is what we expect from you this year. And I think we've always had that. So even talking to the investors, we were able to say, well, this is where we started, this is where we've got to, and this is where we want to get to, and this is our vision. And it's very funny, interesting, listening to Andrew, is that I've had I intuitively, when I'm presenting numbers about where we want to go, I want to present reality. I find it very hard to, what would I say? If I don't believe in it, I find it very hard to present it.
Yes.
Okay. And I think also I'm more credible because I can stand by it. However, I'm not presenting that we're going to be a unicorn.
Yes.
And I've been, you meet advisors along the way going, you have to up the number.
Yeah.
Up the number, get more in there. I go, geez, I don't know, can I really stamp? And I think you need to be very comfortable with, don't let anyone bully you into presenting numbers that aren't real.
I think that's a very good point, because I vividly remember us working on the assumptions behind the numbers, and you had been talking to the people who saying, put in 10 million in year 3, it'll be fine. And we were going, okay, how in a due diligence situation are you going to back up those assumptions of the 10 million? Like how many challenges and how many companies need to be done? I remember going through all that detail with you out in our place with it up on the board, and going, we can't get to 10 million.
Yes.
That isn't physically possible within the resources of this business. Even if you raise $1 million, that isn't feasible. 10 million in 3 years isn't something. So we talk about the reality of having ambition. You have to have a realistic view of ambition, and I think you were always very clear about that, so that your credibility would be intact.
Exactly, when you stood in front of people, and I think investors respect that. I think it was something that Andrew said. You put yourself in the shoes of the investors. So I was going out and I was looking for a minimum investment of maybe 50,000. For a lot of these people, that's not a lot of money, but still, for some of them, it was a significant amount of money. So, and what would you want to see if you were investing 50,000 of your money in a company? And I've got 2 good bits of advice for people. I think one was from a VC. So we started knocking on VC's door. I did 2 meetings with VCs, and I said, I'm going to pack that in. And the VC was very good. He brought me for a coffee after, and he said, you should not contact us. We should be contacting you.
Right.
And I thought that was really key. And we're trying to do that at the moment. And since we got our pre-seed and we're kind of out on LinkedIn, we've got 2 calls from 2 VCs who want to meet with us just to see where we're at and stuff like that.
Yeah, FOMO, as Aidan said. They're seeing that there's action now, and
there's
they
happening
want
here.
to be
We'd
part
like
of
to
it.
learn.
They weren't taking the early risk, like your angel investors. So explain to us who, without naming names or getting into too much detail, who is in this early round then?
Yeah, so a bit of advice I give for people is that, when I did it first, and Enterprise Ireland said, we're open to doing a matching funding round with you, and, so they were saying they'll bring 200,000 to the table if we brought 300,000 to the table. I originally thought, I'm going to have to raise 300,000 to have it all together in a suitcase, but it's not like we spread that out over 12 months, that raise. So we've spent a good bit of that money already. Like, we'll have to go recapitalize again, let's say Q1 of next year, So so that's the first thing, is that it can be an ongoing process. One of the really nice things that I learned, Rosemary, is that when you get an investor that really likes what you're doing, they have friends. Right. So I never counted on that, David loved that. Oh, wait, let's tell Mary about this. And suddenly they'll go, I'll send them an email, I'll introduce you. Like, that email is valuable. It's so, rather than you going a cold email, you've got to see this thing. This is John Barron, met him last week. I'm putting some money into this. And they go, how much is Dave putting in? Do you mind me asking? And then they're going, oh, great, okay. That's been super helpful.
I've never come across anybody, by the way, who can pitch their business on the side of a football pitch, a hurling pitch, anywhere, like pitching for business, pitching for investment, absolutely anywhere.
No, and you know, we got our chairman, it happened at the side of a pitch, Brian Kelly, and I said to him, we're starting a movement. We're starting a movement. That's our kind of, to get people moving. And he goes, oh, I love that, you know. And then he said, we met for coffee, and then that was it. But
the process of bringing those investors on board, then obviously you met a lot of people for coffee. You met a lot of people on the side of pitches. You met people for pints. It was a long, arduous process of people indicating interest, going cool, getting warm again. It wasn't linear.
No, it certainly wasn't.
Yeah.
And also you get people that will say no, and say no in a terrible way, right?
Yeah.
Say, like, they'll go, this will never work. You're mad. What are you thinking of? You know, not just saying, look, this is not for me. And if I'm ever in that position, I will say that, thanks, but this is not for me.
Yeah.
But there'll be people they think it's in your interest that they're going to destroy your idea, you know, and you just can't take that personal. You have to park it and move on. But I think I had a call with EI during the week. I think this is somewhere where EI could help a bit more, is that on the cap table stuff that Aidan was talking about. Like, I'm a commercial. I have a brother who was in a startup, and he was lucky. He got an exit out of it. He equates it to doing the Leaving Cert again, which I think is a very good thing, is that you're getting your French under control here, lovely. Then you go, oh shit, I've got my maths to do, you've got all these other things, you know, you as the soul are, you know, like, you're juggling so much, and you can't be an expert on everything. Yeah. So you pitch the business, an investor says to you, and you know very quickly whether someone gets it. Yeah. And they go, you know what, I really like this. I like where you're going with it. Yeah. This is bold, what you're trying to do here. Yeah. You know, in terms of what we're trying to do is trying to integrate movement into everyone's, make it an integral part of everyone's working day, essentially. Yeah. Like, that's a bold vision or bold mission. But some people go, I want to be part of this. This is a positive thing. I can see a need for it, see the pain point. And then you take them along that journey. Like, I would say, your solicitor and your accountant are very, very important, to Aidan's point. So I think in terms of pre-seed, there's a guy here, Paul Moran. Paul is with O'Connor's Solicitors in Waterford. I'd really recommend Paul. What's lovely about Paul is when you rock in, you say, look, I have this PSSF contract. Enterprise Ireland kind of leave you off. They hire Beauchamps in Dublin. They come in. Yeah. Beauchamps don't want to deal with you as the founder. They want to deal with a solicitor. Yeah. Paul knows what he's doing. He's done a lot of these now. And the great thing with Paul is he'll give you an upfront price. Yeah. So there's no, your money is
by the hour situation. Yeah.
Then when you move on from that, if you're doing a HPSU, a matching funding round, I'd recommend Wallace Corporate in Dublin. Alan Ryan is another Waterford guy. Yeah. Alan is a partner there. Alan will take care of you. My accountants are Fitzgerald Power in Waterford. They're really, really good. A little bit expensive, but they do a good job, right? Yeah. So, you know, but that's, again, I think having those people in your corner is crucial at that stage, because they're legal documents.
Yeah, the knowledge that they have.
The knowledge that they have. And this is my second startup. I still didn't know a lot of this stuff, you know. Yeah. And you've got to have people. Yeah. You've got to have people that know what they're doing. Yeah, you know, it's too important. Yeah, it's too important.
Okay, well, I'm getting signals that we're out of time. Great. But I want you to stay here, and I'm going to invite Andrew and Aidan back up, and we'll have a chat and take any questions from here. Thanks a million, John. That was excellent.
My pleasure.
Yeah, brilliant. Great insight. We could talk for hours.
Yeah.
We have talked for hours.
Yeah, that's it, Rosemary.
Yeah, that's not new. So, there might be some questions coming in. I'll have a look at that now, coming in from the folks at home, as they say. It's like the Eurovision. We've got our panel here and our panel at home. I'm going to start with Aidan for a minute. In the current funding environment, how difficult is it? Like, everyone's hearing about, you know, there's not a huge amount of capital out there, and John could probably chime in with this as well. How difficult is it for people here and online to raise money if they're trying to do so in the next few months?
Yeah. Like you saw, like late last year, they were saying there was a big decline in sub-million, sub-500,000 type rounds, that there was an awful lot of investments that angels and VCs and seed funds were doing lots of follow-on rounds, for example, like keeping hot what they had already got, kind of thing. There are still lots of investment out there, But I presume, or I suppose the way it's kind of going is that with America, with Trump, there's a cloud maybe of negativity around, and that trickles right down to the angel investor who might have 20 grand or 30 grand to put into something. In that, what we're kind of seeing at the moment is that due diligence is probably taking a little bit longer than it may be used to. The bar for startups is set a little bit higher in that investors now are looking for traction, that little bit of engagement with customers. So no, I think overall the money is still there, the infrastructure is still there with the likes of HBAN and syndicates. They're actively looking. It's very competitive. You have to have everything lined up, as John said. So it's just a matter of going out and presenting it yourself in the optimal way and presenting the opportunity in the optimal way. And that has always held true, no matter whether it was 10 years ago or today or tomorrow. It's just that it is very challenging at the moment.
Okay. John, would you agree?
Yeah, I would. And I think the other thing that's come up, so we launched, as I said, in 2023, and there wasn't a mention of AI then. Where now every conversation, especially if you're in software, is AI. What role does AI play here? How are you using AI? Where does it? And that's the reality, you know. AI has to be part of your business, you know. So you can be sort of people led but AI powered, but it needs to factor in. And if you're not talking AI, they won't take you seriously, you know.
Andrew, questions has just come in over the Zoom. Are there red flags in a pitch, that things that you've seen in pitches that you would say, get rid of that, cut it out? Things to avoid is the question.
I don't necessarily think there's things to avoid, but what I talk about all the time is I was at something recently where the man had $1 million in sales and he mentioned it in slide 9. But everyone had stopped listening by slide 2 or 3. So it's those are the things that are important. The other thing is, and it's true, and I've sort of made it down listening to the conversation with John and the others, people give money to people. That's the simple reality. So you need to be enthusiastic, you need to be excited, you can't turn up and sort of be half-baked about this, you have to be passionate. And there's I was really, and this applies to me in the age that I am, the McCarthy, he used to be on the radio, financial advisor years ago. He was in the Irish Sunday Independent every week. And it was very interesting. He wrote an article a couple of weeks ago and he says, something happens in Ireland every 10 years. He says, we don't know what it is, but he says something happens. And I can think about that and back through my life. You know, there's, you know, from the crash to COVID to Trump now, and before that there was other things. But the people who give up, and the people who keep knocking on doors are the ones who are successful. So you can find excuses for not doing it. It's not the right time and all that sort of stuff. But you can't do that. You've got to just keep going.
We have an Australian investor, and he equated it to investing in a race, a horse race. And he said, what you're looking for, he said, is you want the business owner, you want a good jockey. So that's the business owner. And then he equated a good horse to being like a good business idea. So ideally, you're looking for a good jockey and a good horse, right?
So you want Rachel Blackmore on honeysuckle.
On honeysuckle, exactly. However, he said he would never invest in a bad jockey and a good horse. But he would consider investing in a good jockey and a bad horse. So as you said, if the founder is everything, you know.
Speaking of founders, John, and this is a question coming in from Zoom, is there another founder or startup that you have admired or that you would have modelled GoChallenge on?
Work Vivo.
Okay.
Yeah, very much so. So initially, again, I was very fortunate. Was it New Frontiers? Yeah. They brought the founder of Work Vivo along to talk. And we absolutely modelled our launch on what they had done. So they'd got 2 customers, which they charged, and the customers understood that this was a startup and that was very much an MVP and were patient. And then they publicised the hell that we've got these 2 partners, we've got money, and they got some investment after that, and they rolled on and rolled on. So Work Vivo, and also the other, again, another car company, teamwork.
Teamwork. Yeah.
Yeah, very good. So it was very funny. Just very quick. I was talking to the guy there. GoChallenge.com. The URL came up, and I could buy it, and it was going to cost a few thousand to buy it. And I was there, well, won't I? And they had a similar experience. So the guy there was telling me, no, you get that. And again, that's another step, and you kind of go, okay,
good advice.
Yeah.
Yeah.
That was it.
Another question coming in, Aidan, is Ireland a good place to raise money, or should people be looking at other options? I think this obviously came up earlier.
Number one, Ireland's a great place. Like as John said, sometimes the what an entrepreneur or startup needs is to first how to navigate the support system. Sometimes we spend a lot of time maybe signposting for the promoters. This is what you do, the right funding, the right support at the right time, as we say. But what we are seeing in the last maybe 8-10 months is that our clients are extremely resilient and great at pursuing opportunities, whether they be in Ireland or abroad. We are seeing a lot more international money going into Irish startups because they know it's there, they know it's available. And to Andrew's point, I think, like if you saw the figures there, like a seed round in Ireland, it's bitty money in other parts of America and Europe. So I think there's a generation of entrepreneurs and startups in Ireland now who are thinking bigger and saying we need to go faster, we need to be more international, and they're beginning to look at international sources of funds, be it angel networks in other countries or tapping into networks that they've built themselves. There's Irish all over the world, and they're kind of tapping into those networks as well. So we're seeing it's becoming more and more prevalent, I would say, and there's nothing stopping them. The world is a lot smaller with the technology and all the rest of it. You can have those meetings, and COVID proved that point as well, that a lot of startups were meeting investors online that they never met in person, and that model worked really well, and it's continuing to do so as well. So I would encourage startups, don't limit it in Ireland. Ireland is still, while there's a lot of positives, there's an awful lot of fitting the current structures. Like PSSF is 50k or 100k. HPSU is limited in terms of the initial round anyway. After that, there's lots of money can go in. So sometimes you're just trying to fit into the square pegs and round holes and all of that kind of thing. So whereas if you look abroad, the expectation might be that you can raise more. And accelerate quicker.
This is from Sarah. If anybody has a question here, actually, we've loads of questions now. They come all at once like buses. Yeah.
I'd like to follow up on that topic that both Andrew and John raised, is like showing big ambition versus having realistic numbers and a business plan. Now, I'm rather with John, I have to say. Like my numbers are really like based on what I really think I can deliver, and that's coming from my background in like big corporate, where I usually went very well with under-promise and over-deliver. Like that kept my own job really like quiet and nice. And apart from over-promise and under-deliver, then you have a very different like set of conversations afterwards. Is there anything like on advice, like from your experience, like what's your balance? How do you balance that realistic target or realistic base of your business plan, but at the same time showing that big ambition as well? Like, is there anything you can say about it?
I think what I would say is the point that John made is you can't say it unless you believe it. And as a presenter, and you'll have all seen this, where someone says, we're going to do 50,000, and you've just given it away. The expression has given it away. So it has to be what you genuinely believe that you can achieve. That would be my view.
So what we've done, and what I'm comfortable with presenting, is we show our 5-year B2B projection. And we have a vision to go into the B2C market. So we tell the story around that. We haven't sized that financially yet. So it's a bit like what you were saying earlier on, is that, look, at the moment we're doing jams, this is where we're going to get to, but we have a vision to go on. And I don't think that vision is, what we're saying to people, that's probably 3, maybe 4 years down the road, but that's where we're bringing this company. And we find that our brand will be able to follow on in terms of GoChallenge. It will work in the consumer space too, and you know, and again, just maybe some mock-ups of what that looks like, but we haven't sized it, you know. And I think that's enough. Just the vision piece, I think.
Yeah, and what we do in Propelor, I suppose, is that we're trying to build the financial model from the ground up, based on the resources you currently have, or maybe will have in 6 months or whatever. What will the financial model look like then? And there is that fine line between being ambitious and overly cautious, and it's that sweet spot you need to hit it, because we've seen lots of people, to Andrew's point, either too low or too high, and you're losing credibility on both counts. That you either get criticised for being not ambitious enough or cray in terms of what you're trying to achieve. So it's in terms of financial model, building it from the ground up in a realistic way will give a figure, and then the next discussion is, okay, can we push that or see where we can end up with it?
I think and from an investor's point of view, when they feel they're in safe hands, you know, like that, we have a board meeting every quarter. We send on the results and what we're doing, and we are like, you know, our target for this year is quite small, you know, but they know that our focus is on developing the product, and that's what we concentrate on. And then we said, look, we're doing this in sales, but this is our priority, you know. I think that works too.
Question for Aidan from Stephen. Great session! ! If a startup is at PSSF application stage, is that the right time to start getting in touch with investors to start warming them up, or is it too soon?
No, I think you can have those discussions, and part of the PSSF process is EI do ask you what discussions you've had with investors, and where are you at in those initial discussions. So it's no harm. As I said, the PSSF is probably the first time, unless you've taken in money yourself, is probably the first time that investor phase of your journey starts. So no, it's not too early, I suppose. No, I wouldn't be of the view that some people would say, it's never too early to start talking to investors. Sometimes it actually is.
Yeah.
And that you're kind of delaying, that the answer that you might get is, look, you're way too early, come back, and I'd rather go in with a little bit more.
Yeah, there is a sweet spot in time, really, isn't there, that you can approach people.
There definitely is.
And John brought it up, approaching the correct investors as well. Yeah. As in you went to 2 VC meetings and decided that that's not for you this time.
No, they weren't getting up out of bed for the money we were looking at. Yeah. And they said, look, come back, looks good, but come back in another year or two when you're looking to raise a significant amount. So that was it. So you're talking over $1 million.
Yeah.
I think most VCs in Ireland, you can correct me now,
100%.
Bar one or two, who are in specific sectors.
Yeah.
And also they're looking for specifics around monthly recurring revenue. And they have thresholds by which they measure the potential.
Yeah. So, you're a serious business by the time you get to that stage. That's it.
Yeah. Is it a question on Zoom as well? Andrew, you've obviously worked with lots of startups. Who is the most successful and why?
It's interesting because
which one of your children is the best?
Well, it's interesting insofar as my wife and I were having coffee in Waterford here yesterday afternoon, and across the road from us was Cece, the I don't know what you'd call it. Sorry.
It's creative shop.
No, it's they do. This is an oversimplification, but they do Botox and all of that sort of
stuff.
Sisu.
Yeah. What's the guy's name?
Pat Phelan.
Pat Phelan.
Well, I coached Pat in 2014 when they went to one of the big pitching events in California.
Y Combinator or something.
One of those ones, yeah. And it was very interesting because then they went on and they built that business, which was sold for 45 million. And the thing that's interesting, the story of Sisu, is that it was 2 doctors who had a shop in Cork, and Pat went into them and said, look, this can be global. And that he brought that vision to it about, you do what you do here, you do it in Waterford, you do it in New York, you do it, but the same thing, but you do it. So he's probably one of the ones, and interestingly, he still gives lots of advice to people and help to people and still invests. He has a small investment fund as well.
Yes, yeah.
And so he's the one that sort of immediately sort of jumps out. The other one is I do work with, and it's a point that I sort of like to make, I do work with a company called Cool Planet, which was started by Norman Crowley. And Norman is not in the business anymore on a day-to-day basis. He's not involved in it. He's doing a whole load of other stuff. But if there's an important presentation or if they want to get press coverage, Norman's the one who's wheeled out. Because he's the founder, he's the person who started the business. It was suggested earlier, and I think it was you, Aidan, that sort of said, you'll need a salesperson. Best salesperson is always the founder. Always the founder. And it doesn't matter what stage you're at, the people will want to meet the founder.
Yeah, for sure. Any other questions in the room before?
Yeah, quick one.
Zoltan.
You mentioned this was your second company. Does that come up in discussions, and how do you talk about your first company?
Yeah, it does. So the first company is still going, and I'm leaning on the first company. I'm a significant shareholder in the first company still for the development end of things. So it's funny, I hadn't seen that as being a huge advantage, but when I spoke to one or two, they were asking, where has this been developed? I was saying, well, I actually have this other company and the work has been done there, and we're getting it at a fraction of the cost that would cost to develop it, externally. So that's been a huge plus for us. Yeah. So I'm no longer an executive there. I sort of sit on the board of it and that like that. So I'm not as hands-on. But that's it. So it hasn't. There wasn't a bad story like with Enterprise Ireland, for instance. Sorry, yeah. But Enterprise Ireland, we did a matching funding round with them. We've paid them back their money. We got some money from Invest Northern Ireland. We paid them back their money. We had two investors on top of myself and the co-founder of that company had put in money. We've paid them back their money with some dividends on top. So they've exited now as well. So I'm really that company's been nearly used to kind of help me develop GoChallenge, So so that's it. So no bad. Yeah, I've no baggage.
Yeah.
But you have to separate yourself as well. You have to make it clear that you're focused now on the new one.
Yes, and that was very much the case with Enterprise Ireland. Enterprise Ireland would have had visibility of my previous company, so they knew where it was at. So that was very clear that we had to, make, again, even legally to kind of put in place, so we have a contract that all IP that's been developed by this other company resides in GoChallenge. The AWS environment is a GoChallenge AWS environment, so everything has been done above board.
But generally seen as it's a very positive thing. If you have been there, done that, have the scars and all the rest of it, it's seen very positive.
Any startup experience at all, really, absolutely. Even if it as an employee or, So if there's no other questions here, I'm going to have one last question to John. I didn't give him this one, so he's going to go. If you could go back to day one, what would you do differently, if anything?
I think Aidan has made a very good point there about when, and I don't know any other way to do it, right? So I went the new frontiers. We didn't need the local enterprise board, but I probably would have hit them up as well. But we didn't need to. We went straight to Enterprise Ireland, and we went that route. I met someone I'd been in college with recently. It looks like he's going to invest. He's made a bit of money, and he was saying, "Why didn't you come to me earlier? We could have got more money. Like this. You need more money, and you're not being ambitious enough." And I think sometimes in Ireland, as we've kind of alluded to it today. Now I'm not. I have a family at home, mortgage, all that. I'm not getting up and heading off to San Francisco, right?
Yeah.
But that we didn't even look at America. We didn't even look at the UK for fun. We just stayed within the Irish ecosystem, and maybe I should look at
earlier on the funding side.
So next time that won't be the case. We'll definitely look outside.
Go big or go home.
Go big or go challenge. That's what we say.
Good one.
Listen, I think that's a good way to end things. I want to thank everybody for coming. Thank you all online for joining us. Thank Andrew from Aristo. Thank John Barron from GoChallenge and Aidan Shine from Propelor. And thanks to everybody for being here. Cheers.
Thanks very much.